All right, gang. Welcome to the WIRA Daily Market Update. It is Friday, so that's the end of the first half of the year. That is the end of the second quarter. And guess what? Despite all that negativity in the news, this was the best first half of the year in over 20 years. Hard to tell, right? By the volatility and stuff and the way that they profess the end of the world on CNBC and stuff. But hey, let's go take a look at the S&P 500. Uh, it was a good day today. Let's go with a 5-day chart here. You can see, and we got 5 days here. All right. So you can see we've got the start of the day. We had a nice little gap up. Then we had a little bit of selling come in, but the buyer stepped up again. And then guess what? The second half of the day was pretty much drip drown. And you can see it, just a slow drip, little slow death there. And then the buyer stepped in the last 15, 20 minutes. It was an interesting day, right? It's like everybody kind of stepped away, and then at the end of the day, everybody wanted to be positioned. Why? Well, we got some good catalysts on the horizon, and there's a good chance that a lot of the bad news is just done. So we'll see. We got Trump at the G-20. He's meeting with Xi. We'll see what comes out of that. So far, it's been wine and roses, and that's what's helping beef up this market. But, we think that'll continue. We've got a good big jobs report coming next week. We've got earnings season right around the corner. We've got a big holiday week this week. Don't forget, you traders, markets close on Thursday for July 4th, Independence Day, and half a day on Wednesday. Friday's normal trading. So remember, there's a short week, but like I said, we got a jobs report. We're rolling into earnings season. And we've got the July Fed meeting too, right? Which will come by in a blink of the eye. It seems far away now. And that's supposed to be a big catalyst too. We'll see if all this plays out. You still want to be a little cautious in this market, but you should have some exposure like we've been talking about. We think we're in a bull rally and we're about to have a big leg up. We're in some Q plays. We talked about that the other day. We ended up a Q play at 195. We're going to let these gel. The Q's had a decent day today. They've had a decent couple of days after that little selling event, the beginning of the week. And the VIX is telling us nothing, trading around 1545. If there's any fear in the market, the VIX is definitely not reflecting it. So you want to also take that with kind of a grain of salt, right? Don't get overconfident just because the VIX is low. That doesn't mean that this thing can't explode and the market just go down. So make sure that you're exposed, but not crazy exposed. And what do I mean by that? Be in some good plays. We went with an index fund, right? We went with tech because we feel tech has been beat down the most, and it's probably got the most to gain on any big rally. We're still in our CRM play, our Salesforce.com play, and we're going to stay in that for right now. Salesforce.com had a good day, had a real volatile day, and then at the end, it just popped right back over that 151, almost 152. We like this to make a big run right back up to that 160, 165 level soon. You can see it on the Fibonacci here. We're trading right below that 38% level. We like it to just blow through this at some point. That was pent up. The stock's really getting pent up right now. It's a stock that a lot of people want to own, and we feel it was the beat down it got over the Tableau purchase was really not justified. So maybe some fund managers stepping in at the end of the day with window dressing and stuff, but whatever it was, it really gave the momentum a boost on this one. So we'll stick with that play. We're still in the oil play. Oil had a good week. This here is a year chart, but we're carrying oil for right now. We think there's a big oil rally coming in oil, and so no sense give up on those positions. We're all the way out to the end of July, so we'll give it a little room to run, especially with the action in the stock. It's a nice bounce at first there, the beginning of May. Off that December low, and then we came back, retested it, and tested it like a champ. And we get over this $15, $16 level, pretty much over that $16 collusion. We think a run up to $18, $20 is in the cards. And we'll see if that materializes. Our X trade that we're in those leaps looking fantastic. Beautiful bounce off that May low. And look at that. It's been a run since. This is the Trump trade gone bad, right? Since the beginning of the year, the steel trade's just been sagging, right? No infrastructure play, no infrastructure bill. The trade war is not going the way that the market wanted it to. And now this is another one, pent up stock ready to just blow up. This is ones we're sitting on some $25 calls all the way out to January, and those are already break even right now, almost profitable. Our other long-term trade is CLDR. We're still sitting on this one. It's building a nice base, and we're looking for a little exit plan on this, but we're out in some leaps all the way to January, so we've got time to make a decision on this one. The other one is AKS, which is our steel play in tandem with the X play. So we got a big company and a small company, and you can see pretty much the charts mimic each other. So the story with X is the story with AKS. Now remember, with these two steel plays, the last earnings these guys had, AKS, it was fantastic earnings, and US Steel was the best earnings in the company's history. So there's a lot of things that are telling you different information than what the media and stuff is telling you about steel, right? All the experts are talking, get out of steel, get out of steel, and that's how it got beat down most of the year. There was nothing to counter that with any infrastructure bill, something to counter it. So it just trickled down, and now we feel that this thing is really in breakout mode. Um, Other than that, man, we're still very bullish on the market, so we're positioned well. You guys go ahead and start your weekend. We'll be back on Monday with some more, hopefully, some more good advice for you guys. You got any comments? Post them in the YouTube comments. Please share the show, subscribe, all that good stuff. We can use all the help we can get. All right, we'll talk soon.